So we're going to talk a few cheap stocks, and what I want you to remember is that it may take a few years for them to come back and reach their full potential because, as we know, Mr. Market can be pretty irrational, but over time, solid companies do achieve their earnings potential and their share price will eventually recover. Did you catch the news that Dick's Sporting Goods, ticker DKS, just hit an all-time high today of almost $150 because they raised that dividend 105%. And my little hack for you is Seeking Alpha. What I love about it is the comment sections. The articles are good, but you can learn so much from what people in the comments are saying. There's plenty of good stuff on Seeking Alpha for free, but if you'd like a little taste of the premium and help this old sailor out with a few extra bucks, there's an affiliate link I've dropped below. You can get 59% off of your first year. Now, the first stock I have for you is Boise Cascade Company, ticker BCC, and they simply make money by selling wood products such as plywood, lumber, and particle board, and these are used to build houses, furniture. And on Boise's last earnings call, CEO Nate Jorgensen said they had strong financial results in 2022, net income of $857.7 million, and they have growth initiatives in wood products and building materials distribution. However, quarter four saw a decline in new residential construction, impacting sales and net income. And while they do have a dividend yield less than 1%, full disclosure, I did just start a brand new position into Boise Cascade. Now, always remember not to buy a company just for that dividend yield because, as we've seen with AT&T and Verizon, they have not performed that well when considering total return. And total return is just your share price appreciation, all distributions, dividends, special dividends. But Boise Cascade last increased that dividend 21%. And they have a 49% 5-year compound annual growth rate, which is huge. Currently paying 60 cents annually, 15 cents per share. And in 2022, they had special payouts of $2.50 and $1. And check that out. Their free cash flow payout ratio, which you guys know I love, only 2%. That leaves an amazing amount of room for dividend growth in the future. And while their shares outstanding have pretty much been flattish like a radish the last few years, they do intend to return capital to shareholders through buybacks and dividends. And they have a very strong return on invested capital of 44% and a strong balance sheet with currently no net debt, according to Simply Safe Dividends. And checking in on Seeking Alpha, they do indeed have a negative net debt of $463 million. And we're going to use an intrinsic valuation from alphaspread.com, currently trading at $66.67 as Boise Cascade. They have an intrinsic value in the base case of $100.46, making them about 34% undervalued. And under a worst case scenario, an intrinsic value of $72, so they're about 8% undervalued, which is one of the reasons why I started a position. 53% return on invested capital. Management is doing a phenomenal job. And again, we can see they have total debt of $475 million and cash equivalents of $867 million. So they have negative net debt. And even Wall Street's on board. They have 13% upside for the average forecasted price target. And they have 3 key customers that are in the United States: Lowe's, Packaging Corp of America, and Home Depot. This next company you may not be familiar with, but I guarantee you're going to be very familiar with many of the companies and products that they do own, which is IAC Incorporated, ticker IAC, and they make money by owning and operating various digital businesses like Angie, Better Homes and Gardens, Investopedia, Daily Beast, Match Group, and Dotdash, and they generate revenue through advertising, subscription, and transaction fees, and they are a business incubator and spin-off machine. Some of the businesses they've spun out are Expedia, HSN, Ticketmaster, LendingTree, Match Group, Angie Home Services, Vimeo, and Care.com. Now, it's true, IAC does not pay a dividend. but they spin out a lot of businesses, so that could be considered a dividend of sorts. And I just thought it was a cool company I came across while I was doing some research for you. But they had paid a dividend up until 2015. Do be aware that they're negative free cash flow right now, but from what I understand, they're investing, trying to grow the business, making those acquisitions, and things should look better, and they are growing their sales up 42%. As you can see, they've bought back some shares. This one is a little bit of a riskier play. I know. Negative 5% return on invested capital. These are just ideas, people. Keep this one on your watch list. But what really jumped out at me was the intrinsic valuation of $79. So they're about 34% undervalued their current price of $52.33. And the worst case, about $55, meaning it's about 6% undervalued from here. And you see they have about $2 billion of total debt and $1.4 billion of cash and cash equivalents. So it's not that bad, about 13% net debt. But if you look at the Wall Street forecast, even the lowest has about 4% upside, with the average about 53% upside from here. And this kind of caught my attention was the insider trading. Their director, Michael Eisner, if you remember Michael Eisner from Disney, bought $1.6 million worth of IAC shares on November 23rd of 2022. I saved the best for last, and this was brought to my attention by a member of the community, Glenn Shoemake, who said, I received $33.75 for the 90 shares of GSL that I own. Looking forward to adding more shares soon. Well, Glenn, thanks for the idea, and I'm going to share it with everybody else, as it is Global Ship Lease, ticker GSL, which makes their money by leasing out their container ships to shipping companies who pay rent for using the ships to transport goods. And in their earnings call, management said that their $2.1 billion of contract cover over the next 2.7 years ensures that their debt service, capex, and dividend through 2024 are fully covered without any need for additional charter renewals. And they also pointed out their strong balance sheet. As of this recording, GSL has a dividend yield of 7.32%. This is a dividend payer, not unlike IAC, which I still think it's cool that you can own the company that owns Investopedia. They're unrated, small cap, $741 million. But this, you got to be prepared for a rocky dividend, lots of peaks, lots of valleys. It's the nature of the beast. It's a cyclical industry. And as of right now, they're paying $1.50 per share. This one may take a little leap of faith. Glenn, I'd love for you to chime in on this, but management did say that their dividend, the capex, everything's covered with that $2.7 billion contract cover, but the free cash flow payout ratio as things are right now, negative 866%. That would make me a little bit nervous, as they have negative 14 cents of free cash flow per share, where we can see, even though it's $7.83 of earnings, that's translating all the way to the bottom line of negative 14 cents. And again, just like the cyclicality, they do have a big sales growth. Shares outstanding, again, this would bother me. So Glenn, I don't know how you feel about that, but going from 10 million shares to 35 million shares since 2018 make me a little bit nervous, and it kind of makes me think that maybe they're paying the dividend out of that share dilution. But they do have nice return on invested capital, and their net debt has come down to 52%. This is why we save the best for last. Current share price of $20. They have a base case intrinsic valuation of $90, which would be about 77% undervalued. There's no guarantee that this is going to happen. This is just estimated. Don't take it as gospel, please. But if all things broke right, we could have 77% upside. And even in the worst case, shows about 63% undervalued for GSL. But at least they have 24% return on invested capital, according to Alpha Spread. $789 million of total debt, $103 million of cash and cash equivalents. And there's your Wall Street forecasts. Even the lowest one has 23% upside for GSL. And even checking in on Seeking Alpha, they have a valuation grade of A+. And the analysts for GSL mostly have buy ratings with one hold. Do check out Seeking Alpha. Head to the comments. There's lots to be seen, lots to learn, and very good discussions that happen there. I've learned quite a bit myself. So we talked about Boise Cascade Cascade, which I am an investor in, IAC, which I am not. They don't pay a dividend, but they do spin off a lot of companies, and Global Ship Lease, ticker GSL. Would love to know what you think of these companies. Do you think any of them are investment worthy? Get the discussion started below in the comment section. I want to hear it, and share what companies you think might be significantly undervalued. And when you're done doing that, in the floating little box next to my head, I talked about 10 dividend kings that are about to increase their dividend in the next month or so. So if you click this little box floating next to my head, I will talk to you there.